Hello and welcome Forex Traders. Steve here with TradingForexForProfit.com. Today is Thursday, October 23rd, 2014. I've taken a buy order on the Swiss yen daily time frame following the stop hit that formed right here at support. Okay, so let me point out this level by zooming out first and showing you that this is a level where there was a significant bounce. The market has remained above this level with the exception of one test right here. So let's zoom back in. This test right here came off to the upside nicely. The market returns and dips right down through this entire zone, taking out this level, the stops that were in place here, excuse me, as well as the stops that were in place right here when any traders went long on this this stop hit pattern that formed right here. Of course, if you were trading our system, you would have been out somewhere between this level and this level. Okay, however, here's what forms. This giant bullish spike candle. The market retraces just enough for me to take my entry. Do I take a 50% pullback? No, that's not my rule. 25, no. 30, no. What do? I place my 5 pip stop below the signal candle, and then I'm able to adjust where I want to place my 2 times profit like this. Okay, and somewhere in here the market was right around this level. I said, okay, as long as I keep it at this zone here, should be okay. All right. Now, will the market retest this high? We don't know. Is there a higher chance of it retesting this level of significance? Yes, there is. So that's what I shoot for. All right. All right. Our 2 times profit target was reached, and in about a week. It took, let's see, 1, 2, 3, 4, 5, 6 days. Okay, so 6 days to hit your target. That's typical of the daily candle charts. So if you're trading the daily time frame, the market moves slower. You're going to have your money tied up a little bit longer, perhaps, than if you're trading the 4-hour or the 1-hour charts. Okay, however, when you see a pattern such as the stop hit like this, or one of our other patterns form on the daily time frame, they carry a huge amount of weight and validity behind them because of the time frame that we're looking at. The higher the time frame, the more the higher chance of success on the pattern and the signal. Not that you have a low chance, you have a very high probability chance on all the time frames. However, it is strengthened, of course, as the time frame gets larger up to the daily. Okay, so additionally, remember, the more times a level is tested, okay, right here, this zone was tested twice, and the stop hit took out stops from this level as well as this level, which is pretty much the same zone. But let me zoom back in. Okay, so here's our level. It reached well below that level, as well as right here. Look at how the market moved off of just this inner stop hit right here, that I like to call it. So once you have a huge candle that takes out both of those levels, now we're talking massive power behind this move. We fall off slightly, giving everybody a chance for an entry, and then off we go to the upside. So once again, the target was here. Okay, the further target would be up at this level. Let me zoom out one more time, and then additionally we would watch for this level. So at this point in the game, okay, we are now watching this level for price signals, patterns to form, either a continuation or, of course, perhaps a crash back to the downside to recoup some of this gain that we've seen over the last week. Okay, so once again, the stop hit pattern, it's very powerful. Learn to trade it, learn to watch for it. It's very easy to recognize. Right here, okay, there it is again. However, what do I say? I don't trade after a large bodied candle. When I see a signal to follow with 2 smaller candles. Okay, so we have this large body, we have the small body, and then the engulfing. Okay, I don't trade this because of this large candle, and then 2 small candles followed. However, I'm just pointing out that, look, here's another bounce, return to the area, take the stops, and move. So not always does it form a signal like this or as obvious as this. Okay, sometimes it's more subtle, but the market still moves following these basic principles. Do I get in and trade a signal that's, well, a pattern that completes without the valid signal? No. Okay, but I trade this one, I trade this one, and I'll trade many others. Okay, so this is in fact how the market moves. Right here, we bounce, move back to this level, we take out the stops, and then we crash. See how hard the market pushes down to this level? Okay, that happens after the stops are hit. There was no follow through. However, this is in fact, once you learn this, and I would recommend when you start our course, which is free, I would start with the stop hit pattern and master that one first, because it's the one that appears most frequently in the market. Okay, that's enough rambling. But anyway, here we are, October 31st. The profit has been taken on this nice little stop hit pattern that we traded here back a week ago.